Good evening, everyone. I am Senator Roxanne Persaud, and welcome to our conversation this evening. The topic is IRS tools and resources to help small business owners. As you know, this is Small Business Week, and so we are bringing resources to small businesses across Senate District 19 and beyond. Our hybrid conversation this evening is being televised via Zoom and on Facebook. If you're joining us by Facebook, please, we ask you to place your questions and on the comment section, and we will answer as many of them as possible. If you've joined us by Zoom, you place your questions in the chat feature, and we will answer as many of them also within the time that we have. Our panelist this evening is Ms. Tatiana Williams. She's an IRS communication liaison. And I am going to ask Ms. Williams, who has worked with us before in various capacities, if she can introduce herself and tell us, what she does at the IRS and, what brings her to this space before we begin our conversation this evening. Again, welcome to our conversation. It's about IRS tools and resources to help small businesses. I am Senator Roxanne Persaud, and I hope that the information that we will share with you this evening will go a long way in assisting you in whatever small business you have. Anyone who wishes to contact Ms. Williams after, she will give you her contact information or the office's contact information so you can follow up. But I'm going to now turn it over to Ms. Tatiana Williams, who is representing the IRS this evening. Thank you, Ms. Williams, and thank you for being here.
Thank you. Thank you very much. Can you hear me okay?
Yes, I can.
Thank you. And good evening, everyone. Again, I am Tatiana Williams, a senior stakeholder liaison with the IRS Communication and Liaison Outreach and Education area. I've been with the IRS since 2019. I started out as a revenue agent where I review the books and records of tax-exempt organizations. But now I partner with organizations and government such as Senator Persaud to share IRS outreach and educational resources. So like Senator Persaud said, May 3rd through May 9th is National Small Business Week. So tonight or this evening, I am going to go over some important information and resources for small business owners. And that's my introduction.
Well, thank you for that. So I just want everyone to know that you're going to be telling them this evening, so some of the things that you're going to be talking about this evening is how to open, operate, and close your business, business entity types, independent contractors, etc. So it will be a very informative presentation. So I'm now going to turn it over to you if you have to do your presentation with your slides.
Thank you. So you should see the presentation. Fantastic. Again, this is 2026 National Small Business Week, and I'm going to start off giving you some resources, and then in the end, we're going to talk about, we're going to get your questions, and we're going to just answer it. We're going to have a conversation. We're going to do a Q&A. So let's start with the next slide. So small businesses should be on the lookout for scams. You need to know how to avoid scams. You're going to be on the lookout for the common scams. They target small businesses. So I want you to use these tips. I'm going to have to go off camera for 1 sec, and I'll still talk, but I'll be off camera. So I want you to use these tips to help protect your business. Data and employees, you need to know how to report suspicious activity. The IRS publishes every year the Dirty Dozen list. And that's a list that focus on getting to your small business. There's scams such as email, phishing, scams like that. If you think something is suspicious, you need to forward that to phishing at irs.gov. There's also internet scams, social media scams. Be really wary when you go on the social media and and there's information that says you can get this credit, you can reduce, this deduction. Always get your information from the source. IRS follow IRS on uh, Instagram, on Facebook. IRS has YouTube videos. But whenever you see something on the internet and it sounds too good to be true, verify it through a credible source such as irs.gov. You want to take proactive steps to safeguard your business and employees by using malware and antivirus, and they should automatically update. And you should have strong passwords and use multi-factor authentication. So multi-factor authentication means you log into your system, and then maybe you have to get a code text to you and you have to enter that code. You want to make sure, so that's multiple login methods. So you want to make sure that you have that. And only your personal data should be entered on secure websites, such as, HTTPS. So that shows you that it's locked, because you want to prevent unauthorized access. And you want to educate your employees on data security to protect your business. The IRS has resources like the IRS Identity Theft Central, and you can get more information about identity theft and publications to get a deep dive, some comprehensive training and awareness. And you want to protect your employer identification number, and that's also called an EIN or federal ID number. You want to keep it secure and up to date. And again, report suspicious IRS and tax related scams through the IRS's fraud webpage. And you want to report them as soon as you feel that there's some wrongdoing, something is going on. This way, the IRS can help address fraud and noncompliance. Okay, so the next slide, please. So here are some best practices for small businesses and tax professionals. You want to correctly classify your business. So there are different classifications or different entity types, and you want to choose the appropriate business or entity for you. There's the sole proprietorship, a partnership, a corporation, S corporation, or LLC. So in order to determine what's right for you, you have to, talk to your team, maybe an attorney. But what the IRS can do for you is, if you go on irs.gov, small business, and type in small business in the search, it'll tell you what each entity type is. For instance, a sole proprietorship will use a Schedule C to file a tax return. Well, a partnership is going to file a tax return, a 1065. Corporations file a tax return 1120. S corporations file different tax returns, and an LLC can be a single member LLC. It can be a partnership. It can be classified as a corporation if you make the appropriate election. This is the information that you need to know when you're considering starting a business. And the IRS has resources for you right on irs.gov. In the search window, you're going to type in small business, and you're going to see information on there about the EIN, entity classifications, and much, much more. So talking about your employer identification number, which is also known as the EIN, also known as the Federal Tax Identification Number. That's the number that the IRS uses to identify a business entity. You can apply for the EIN online for free directly with the IRS. You don't have to pay anyone to get an EIN for you. You can get it for free, and most times it's instantaneous. You get it very quickly. So if you lose or misplace your EIN, there are ways that you can get it back. You can either look at a notice that was issued to you when you applied for the EIN. You can contact your bank that has your business account, because you'll need the EIN when you open up a business account. You can check with agencies where you've applied for state or local licenses. You can look on past tax returns. And if you still can't find it, you can call 800-829-4933. And they're open Monday through Friday, 7 a.m. to 7 p.m. local time. Okay, the other thing you need to do, and this is really important, is keep adequate records. Good records help you monitor the progress of your business. I'm going to talk a little bit more about that in a later slide. You want to make sure that record keeping is just paramount to good business acumen. And you can choose whatever record keeping system that you want, but it has to clearly show income. And I'm going to go over adequate record keepings in a minute. Okay, you want to hire the right tax professional. You want to choose a qualified tax professional that ensure accurate and timely tax preparation. You need to ask the right questions and verify the credentials, so businesses can avoid potential scams and protect their financial interests. Next slide, please. So here are some tips for like tax professionals. There may not be any tax professionals on here, but small business owners should know that tax professionals that support you as a small business owner, there's resources available for those tax professionals. The IRS has the Nationwide Tax Forum, and that's a forum that offers continuing education credits and networking opportunities for tax professionals. And the tax professionals are, you have your CPAs, that's your certified public accountants, you have your enrolled agents, attorneys. Those are credentialed tax professionals, and they can represent you before the IRS. They have what's called unlimited reputation. They have unlimited representative rights. And then you have other tax professionals that they're what's called uncredentialed. You have some that take the IRS's annual filing season program. That's where they learn about the new tax laws. And then you have other tax professionals that, they're not credentialed at all. But you, as a small business owner, you can check on a tax professional's credential. You should interview them, make sure that they are available to you all year long. The IRS has a return preparer directory. You can go there and you can find out about a tax professional, if they're credentialed. If they're not on the directory, then they're not even they're not even listed with the IRS, but they still can do your return. Tax preparers, if they get paid to do your return, they have to prepare a tax ID number. But be aware and choose your tax professionals carefully, and know that the IRS has support for tax professionals. The IRS has a Tax Pro account. That's an account that a tax professional can, that's the way they can view their clients' information, and they can communicate with the IRS on behalf of individual taxpayers in real time. Thank you. Next slide, please. So I spoke about record keeping. I want to talk a little bit more about that. The reason it is paramount to keep good records is because keeping good records allow you to monitor the progress of your business, prepare your financial statements, identify sources of income, keep track of deductible expenses, keep track of your basis in your property, prepare your tax returns, support items reported on your tax return. So if you are keeping good records, suppose you had multiple streams of income. So if you're keeping your receipts and knowing how your income is coming and you keep it in good records, maybe one stream of income is doing really well and you should really focus on that. Maybe one stream of income is not doing so well. Maybe you have to tweak it or do something to bring more revenue in. Or maybe you need to cut off that actual stream of income because it's it's sucking too much energy away from you. You're not making any money from it. If you monitor your revenue, monitor your streams of income, look at it, then you'll know how, you'll know what you should do going forward. You want to keep track of your deductible expenses. When you have a small business or when you have a business, almost every um, expense related to your business is to be done. You can deduct it if it's related to your business, most of them. But how do you know what to deduct if you're not keeping track of it? If you purchase equipment in your business, you want to keep copies of the receipt because this way, you know the basis in that property or that machinery that you purchase for if you sell it or the salvage value. And that's important when you are preparing your tax returns and your financial statements. And as a small business owner, the goal is to grow, to make money. So if you want to go to a lender and apply for a loan, the banks or the lenders, they want to see your financial statements. They want to know if you're making money, if if your income is growing, if your net profits are growing, and if you are a good candidate for a loan. But if you don't have um, adequate financial statements, or if you don't, if you're not showing any income, or you don't even have financial statements, it's going to be really difficult to get a loan. That they're not going to entertain that. And in order to have to get a loan, they're going to ask for a couple of years of tax returns for both your business as well as your personal. So you want to make sure that you are keeping adequate records. And also, if you're preparing your tax returns, the IRS may ask you to actually prove deductions or expenses that you're taking, or even your income sometimes. So when you have records to substantiate what you put on your tax return, it's fine that the IRS comes to ask you because you have it right there. So I underscore that it is really important to keep adequate records, and I hope that I've gotten that point across. Next slide, please. So, what are the supporting documents? So you have invoices, receipts, your payroll records, sales, yes, your revenue, canceled checks, and also with canceled checks, I also have to say EFTs, because a lot of people, they don't write checks anymore. We do a lot of electronic fund transfers, so we have EFTs. Your records should be kept in an orderly fashion in a safe place. You should organize them by year, by type of income or expense. And Publication 583 is a good resource that's starting a business and keeping records. Next slide, please. Okay, so you should have established a business bank account. That's a separate account from your personal account. You should reconcile that account regularly, retain the deposit information and receipts, and you want to use your business account for all of your business transactions. Don't commingle your business transactions with your personal transactions. A good practice is to record expenses when they occur and identify the source of recorded receipts. And it's generally best to record the transactions on a daily basis. This way it's done. Next, so employment records, it's important to keep the employment tax records. You want to maintain them for 4 years. And Publication 15 is the employer's tax guide. And if you have employees, it's good to refer to that publication. Publication 225 is the farmer's tax guide. You can get more information about record keeping and employment records of such by going to irs.gov, and in the search, type in record keeping. Keeping all records of employment for at least 4 years after the 4th filing quarter of the year. Again, irs.gov. Almost all the information that you need in your business and individually actually on irs.gov. Next slide, please. So additional employment tax records. So we spoke about the employer ID number or the EIN. You want to keep that in a safe place. And there's also your employee information. So you want the names, addresses, social security numbers of the employees, and the occupation of employees and recipients. And mind you, that as an employer, you have to keep this information safeguarded. It's personal identifiable information, and you must make sure you keep it locked up in a locked room and it's not available for the public or even other employees to see. So keep it safeguarded. You are the trustee of that information. You want to keep the employment dates of your employee, and those dates should also include like when they started, any sick leave that's taken, any family medical leave that's taken. You want to keep those dates, keep a record of those dates. Of course, you want to keep a copy of how much you pay them. So any wage, annuity, and pension payments, you want to keep a copy of any tips that are reported, and fair market value of in-kind wages paid. So that, you want to keep a record of that. Deposits and dates and amounts of tax deposits made. So, as an employer, you collect the federal withholding, state withholding, the FICA, the Social Security and Medicare withholding. You want to make sure that you keep a copy of all the tax deposits. You have to take that money and deposit it and file your quarterly or annual tax returns. You must make sure that all of that information is kept. And the record should also include copies of the employees' forms, such as the W-4, that's the form that they fill out when they say how many exemptions they're going to take, and that all of their information is on there. W-4P is for pension, things like that. You want to keep a copy of the returns that are filed. I spoke about tips and allocated tips, and records of any fringe benefits that are paid. And you want to include the substantiation, the documentation that proves it. Next slide, please. So electronic records, the same information as paper records is the same for electronic record keeping. And electronic records are generally accepted by the IRS, but if any time an IRS auditor asks for you to submit your records, just make sure you check with them that it's okay to submit electronic records. It's easier, it's maybe not easier, but it saves time and money when you keep records electronically. So that's just a bit of information. Next slide, please. So here we have, so it's never too early to start planning for next year's filing season. So we're in May. You already start working on next year. You want to work with your tax professional year round. Early planning can help your tax strategy for the remainder of the year. It can help you gauge where you are. It can help with estimated taxes. So a lot of, some people, when it's come time to file taxes, they have so much anxiety because they don't know where anything is, or everything, they know where it is, but it's all jumbled up. But if you work on a monthly, daily, weekly basis, keep organized, work with your tax professional, then you'll be able to, when it's tax time, it's come time to filing your taxes, you'll be able to do it with less stress. And then early planning helps you to take advantage of specific credits and deductions. You could qualify for, any number of credits, but such as the work opportunity credit, employer provided child care credit, employer credit for paid family leave and medical leave. And again, a list of business expenses resources can be found on irs.gov. You want to make sure you pay your estimated taxes on time. Don't wait until the last year or the last minute. You want to pay them on time. So typically, individuals, including sole proprietors, partners, S corporation shareholders, they generally must make estimated tax payments if they expect to owe $1,000 or more when their return is filed. So for the estimated tax payment purposes, it's divided into 4 payment periods. Each period has a specific payment due date. So for income that's earned January 1st through March 31st, the estimated payment is due April 15th. If the income is earned April 1st through May 31st, the estimated tax payment is June 15th. For income earned June 1st through August 31st, the estimated payment is due September 15th. And if income that's earned September 1st through December 31st, the estimated payment is due January 15th of the following year. Now, if those dates fall on a weekend, a Sunday, or a holiday, then it's due the next business day. So gig economy workers and entrepreneurs should plan ahead. So gig economy workers are like the Uber drivers or the Lyft or delivery. They're also the content creators and people that sell goods online and freelance workers because that income is taxable. But when they get the payment, there's no tax withheld. Employees, that tax is withheld. The federal taxes, the Medicare, Medicaid, Medicare, and Social Security taxes are withheld. State taxes are withheld. But gig economy workers, they really have to plan because they get paid where there's no taxes withheld. Okay, and you can find additional information on irs.gov. And let's go to the next slide. So here are some tools and resources that's good for small business owners. The IRS has what's called a business tax account, and that's a secure one-stop tool where you can view your balance, you can make a payment, you can view transcripts such as your payroll, income, and access other tax information. The business tax account it's expanded. It's good for sole proprietors, partnerships, S corporations, tax exempt organizations. You go right online, irs.gov, on the business tax account. You can create one. And you can also create an individual online account where you can see information about you, the individual, the tax returns you filed, your adjusted gross income, any notices that you may have received, or any notices that are out there. You can also apply for an identity. You can also obtain identity protection PIN through your IRS online account. And that identity protection PIN, when you file your tax return, that's a 6-digit number that only you and the IRS know about. And you can't file your return unless you enter that identity protection PIN. And you should only share it with your trusted tax preparer when it's time to do your taxes. Now, the business tax account is a tool that small business owners can use. I'll tell you that you'll have to be verified through ID Me. That's a verification process where you'll have like your driver's license or something, and you'll take a picture. You get verified, but it's a great tool to have, and it's one tool that's out there for you. Small business owners should know that they have to e-file information returns starting from tax year 2022 and later. The information returns have to be e-filed, and you can do that through the IRS's information returns income intake system, and that's also known as IRIS. You can also make corrections and file for automatic extensions there. And information returns are like if you have employees and you've submitted W-2s, well, you have to report the W-2s to the IRS. So the W-2 is a information return. Or if you have independent contractors and you gave them 1099s, the 1099 is an information return, and you have to file that with the IRS. The IRS has certain forms that allow taxpayers to easily complete and submit their forms by computer, cell phone, or tablet. So the IRS is getting more digital and mobile friendly. The IRS also has what's called IRS secure messaging, and that's a way for taxpayers and authorized representatives of taxpayers or businesses to directly interact with the IRS representatives. Messages can be securely sent to you by an IRS representative. Now, I want to make clear that secure messaging is initiated through an IRS representative. But if you get an email or a text message that's unsolicited, you have to be wary. An IRS secure messaging, you probably will already have received a notice, a letter from an IRS representative. And as you move on, they're asking for additional information. Then you can move from the letter to the secure messaging. You won't just get a secure, you won't just get a message saying, hey, this is an IRS, we're requesting information. So I just want to make sure you understand the difference. Typically, the IRS contacts you, in writing first through a letter. Next slide, please. So, so small business owners, you have to be prepared in case a disaster happens. You have to have a plan in place. A lot of, disasters happening, hurricanes, tornadoes. And while everything is going great, it's good until it's not. So you want to put a plan in place before something happens. Hopefully nothing happens. But so one of the things you can do is take advantage of paperless record keeping. You can store critical documents in waterproof containers, and you can also duplicate important paperwork. You want to document valuables and business equipment. So what you can do is you have your office, you can take a picture of or video of your equipment and how your office looks now today. And then if a disaster occurs, a flood, a fire, or something like that, you can take pictures and video after the disaster occurs. And then you can use that to help with your insurance claims and also with tax benefits. The IRS often, if it's a federal disaster area, the IRS, will give relief. They'll give additional time to file and pay taxes if it's a federal disaster area, if it's been declared a federal disaster area. And you can also find information on disaster. There's a disaster loss workbook on irs.gov for individuals and businesses. So you can get IRS support during a disaster. Following a federal disaster, the IRS will automatically provide administrative disaster tax relief, and there are special tax law provisions. That's, again, you'll get additional time to file and pay taxes. So, and you want to check if your employer has a employer fiduciary bond, and employers that use a payroll service, they should make sure that the payroll provider has the fiduciary bond in place just in case something happens and the payroll provider defaults. They don't make the deposits, they don't make the payments. The fiduciary bond helps to protect you. And the employers, you can create an electronic federal tax payment system, or EFTPS, to monitor the payroll, tax deposits, and receive email alerts. Okay, next slide, please. So here are some IRS publications and resources that you can use in your business. Publication 535, Business Expenses, we talked about that. Publication 5557, A Guide to Starting a Small Business. So some people are aspiring business owners. Publication 5557 can help give you information on starting a small business. You can also go to irs.gov in the search window. you can type in small business and you can find many resources about starting a business, operating a business, closing a business, the business structure, like we spoke about the different entity classifications, sole proprietorship, a corporation, an S corporation, a partnership, an LLC. The IRS will tell you exactly what those classifications are, what tax return you'll have to file as a result of the classification, and many other resources there. Some people, publication 587, the business use of your home. Some people, when they start their business, it's small. They start from their home. You know, maybe they have an idea and the idea starts at home. Well, publication 587 can give you information on what's deductible or what's the requirements when you have to, when you use your home as your business. You know, it'll tell you things like you have to have a area that's used exclusively and regularly for business. You can't have the business in your dining room. You know, you're going to eat dinner and then you're going to work on your business. Well, that's all well and good. You can do that, but you won't be able to deduct um, expenses, you know, using, you won't be able to deduct expenses that way because it's not exclusively used for business. The space is not exclusively used for business. But if you do have a space that is exclusively and regularly used just for the business, then you'll know that a percentage or a portion of that can be deducted. Uh, if you're paying rent, and if you're using 10% of the space in your house just for business, then 10% of the rent can be expensed or deducted from your income. So publication 587, business use of your home, is a good resource for that. Publication 463, travel, gift, and car expense. Some people use cars, in their business to get from one client to the other. So that's some useful information for you there. Next slide, please. Here are some more publications and sites. Like I said, the IRS Small Business and Self-Employed Tax Center. You can go to irs.gov/smallbiz. All information about small businesses. You can sign up for e-news for small businesses. So you'll get information directly from the IRS relating to small businesses. Like I told you before about social media, you want to get information about IRS, about what deductions you can take, what credits are out there, what deadlines are coming up. You want to get it from the horse's mouth. You want to get it from a credible source. So you can go to irs.gov/social media, and this is where you can get credible information, social media. You can look at a YouTube channel for YouTube channel, the IRS YouTube channel. Go to the IRS YouTube channel. I'm getting tongue tied here. Go to the IRS YouTube channel, and there is a host of information there. And you can look at the small business videos on the YouTube channel. And then you can go to @IRS Small Biz. And there's irsvideos.gov/business. So that has small business tax workshops. I don't think the IRS videos are working. So go to the YouTube channel. So I just want to make sure. I don't want you to go there and not be able to get it. So, but the YouTube channels are good, a good source. And then they have the IRS online tax calendar for small business and self-employed. And that will tell you like when the taxes are due for what specific tax form. Okay. And next slide, I have any questions? Let me come back on camera and I can take any questions.
Well, thank you very much for that. Thank you very much. First, I want to remind everyone that it's irs.gov. Always check to verify that you're accessing the correct website. It's .gov. Anything else, it's not, you're not in the right space. So before you start putting your information in to any of those sites, please know it's a .gov. So we have some questions here. I'm not sure if you can see. I know you said you talked about keeping records for 4 years. What happens if the IRS asks you for some records that you destroyed and it was the 4-year point and you no longer have those records? Then what do you do?
Yeah. So record keeping is based on the 4 years were employment records. So that's where the 4-year reference came in. And generally the IRS, if they're going to go back, they generally do not go back past the 4 years. In some cases they will. So again, that's why it's important maybe to keep it electronically. So you may not have the physical records, but if you have electronic copies, you can keep those for a long time. So I would say electronic copies. If you don't have it, you may have to recreate it.
Mm-hmm.
Typically, if they're going back more than 4 years, it's kind of serious.
It's major. Yes.
Yeah.
So someone asked the question, what are the benefits of creating a tax pro account and how can it help business owners avoid costly mistakes?
The tax pro account is for tax professionals. The tax pro account allows that tax professional to look at some notices from its client. So the business owner is the client of the tax professional. The tax professional can contact the IRS on behalf of the tax client. It could, as long as the tax professional has a power of attorney, it can do that. And it makes it more expedient for the tax professional to contact the IRS on behalf of the tax client. Now, the tax client, the taxpayer themselves, if you're a small business owner, you're encouraged to get a business tax account and an individual online account.
Okay, that makes sense. So we were told that churches are considered as businesses. Could you explain that? And the question is, how long should a church keep financial records?
So a church is a tax exempt organization. I'm going to say most churches are tax exempt organizations, and I can recommend that churches go to irs.gov and type in charity, and they can find a lot of information on tax exempt organizations. And the type of records, the length of time that you should keep records depend on several things. So if you purchase a building, you can depreciate over 27 and a half years, I think, if it's a residential building, and maybe 33 years if it's a commercial building. So you should keep the purchase price of that building for
Forever.
the whole 27 years, the whole 33 years, right?
Mm-hmm.
But if you purchase furniture and equipment, the typical lifespan of the furniture and equipment is 7 years, 5 years. So the length of time that you should keep records, it varies. Tax returns, they say you can hold on to your tax returns between 3 and 7 years. You know, to me, if I have space, I'm going to hold on to them longer. But if you have like assets like that you've purchased and you want to substantiate, if you ever ask to substantiate it. So if you have office equipment and that equipment, the useful life of the equipment is 7 years, then you want to at least keep your records for that 7 years. So the technical answer is you keep records depending on what the records are, if that makes sense.
Yep. We're going to go to another question. Can you describe in-kind wages?
Yes. So in-kind wages is you're not paying them a cash. You may say you worked, I'm going to pay you in like something that's tangible, you know. So instead of cash, you're getting a um you know, I don't know, like a bookcase, something. You're getting something
Right.
other than cash.
Other than cash.
So in kind is something that's other than cash, something tangible, something physical.
So you'll like, I'll work for food, that kind of thing.
Something, yeah, something like that, right?
So when someone works for and it's in-kind wages, is it good practice for them to sign something that you keep on record saying these are the hours they worked and this was the compensation, the in-kind compensation they received?
Right. It should be the fair market value of that compensation. So if it's so say it's food. So if that food is worth $20, you know, a typical restaurant would charge $20 for this meal. So you have to have records to substantiate the fair market value. You can't inflate it and you can't make it below the market value as to manipulate the salary or the wages. It has to be fair market.
Okay. Right, but do you say, is it good practice for once you're doing that, that the employee is signing off to verify, confirming that that's what was done?
Well, they can sign off that that's what they received.
Mhm.
Yeah. So sure, you can do that. What I will tell the person that asked that question is to speak to their accountant to make sure. Just to make sure you're not doing it as a practice, and just to make sure you're not skirting any labor laws.
That's correct. Yeah. Okay. As a small business owner, so they're like talking about the platform, the business platforms and credit card companies that will automatically track and organize your expenses for you. So as someone just starting out a business, is that something that they should do immediately? Or is this, you have to ensure you're building, the business is building up before you start investing in these things?
So the one thing they should do is all of the business expenses should come out of a separate business account. So even if they're using like a credit card, that credit card should only be used for business. It shouldn't be commingled with personal funds if they're just starting out. When they get their EIN, they're going to open up a bank account. So even if you open up a bank account, you don't have a lot of money in there, you could still open up the bank account. And whatever little money you put in there or expenses that come out of there, maybe the credit card is linked to that business account. It just should be segregated. So this way, it could be substantiated. There's no confusion. There's no commingling.
Hmm. Let's see. Is it okay to have my accountant keep all my employment tax records, or should I keep a copy also?
Okay. Okay. You should absolutely keep a copy. What happens if your accountant goes to the moon? You absolutely should keep a copy. And along with that, even if your accountant does all of the work, it's up to you to understand what they are doing. You look over that tax return, you understand this is your business. This is, the accounting, that's like the engine. You have to keep it oiled. You have to know what it's about. If that doesn't work, your whole business could go down the drain. So you absolutely, not only should you keep a copy, you should know that you did $10,000 in payroll and the taxes came to 30, $3,000, and that was deposited on, day, March 6th, and that the tax return was filed appropriately. You should know, even if they're doing the records, it only takes a minute to look at it and to make sure it makes sense.
Okay. So this question, I know our time is coming to an end. There are like two other questions here. Oh, I know I heard you say this. There's actually three questions here. What should I do if I forgot my identity protection PIN?
So if you have an individual online account, all you have to do is log into that account and you can pull it up. If you don't have one, there's a phone number you could call. I don't have the number on hand, but there is a number. You can go to irs.gov, type in IP PIN, and you could get the information for the number.
Okay. Then let's see this question. How do I calculate car usage? Do I record the amount of miles traveled per day?
So for car usage, you can have what's called a trip log. And in the trip log, you do calculate the miles per day. Your odometer is on a certain number. So you start out with that number that's on the odometer. Just say it says 10,000 miles. You go to see a client. So that you traveled 10 miles to see the client. So now the odometer reads 1,000, 10,010. You write down your starting um, time, you write down the client that you want to see, the day and time, and you write down the miles that you rode. Now, what you have to make sure is that you're going to see a client or you're going for business. If you're doing something such as commuting or personal, then that does not count as business miles. But you keep a trip log, and yes, you keep the number of miles that you travel for business.
Hey, that can become complex if you're
Yeah, it can become complex, but if you just leave it in your glove compartment, make it part of the routine. Um, some people, when they have business, they go to the business, they do the same thing over and over again. But yeah, you should have a trip log.
okay.
I mean, that's one of the things. I can't tell you what you can do. That's a suggestion.
A suggestion.
But the answer is yes, you have to track your miles, business miles.
Business miles.
Yes.
Don't mix up business and personal.
Yes, business and personal, or business and commuting. If you're commuting back and forth to a job, some people have jobs as well as businesses. Commuting back and forth to your job is not deductible.
Okay, good. That's good. Something good to tell everybody. Yes. Well, we have come to the end of our conversation. I want to say is there anything else you want to remind the viewers? We have a significant number of viewers on Facebook, because I've been watching that, as well as, and I saw your colleague, Miss Stuart Luke is on, making sure, she's there for your support, right?
Yes.
Yes. Hello, Miss Luke.
Yes.
And so is there anything you want to say, anything else that you want to say in closing to the people who are listening?
Yeah, so just remember that irs.gov, a lot of information is on irs.gov, and you could always go there to find what you want. Um, Only get information from credible sources, and yeah, that's it. I just wish everyone well, because small businesses, they are, they carry the country. They do.
That's right. That's right. And I want to remind everyone that if you would go to a site and it tells you you have to pay a fee to get information, then you're not on the correct site. There are many times, sites are cloned, they look similar, and you think, oh yeah, I'm on the right site. Just make sure you're verifying it's a .gov site, and that once you put your information in there, it's not asking you for any kind of payment. Sometimes you'll go onto a site and you'll click, it's a legitimate site, and you click on a link and it's telling you that it's taking you outside of that site. Always make sure you're reading information to whatever the site is telling you, so that you're not duped. There are too many people who are cloning sites and scamming folks. And so we do not want our small businesses, we know it's difficult times for you trying to make ends meet. And so we do not want people to be taking advantage of you and taking away your hard-earned dollars. So again, Tatiana Williams, I say thank you again for having this conversation with us, letting our small businesses know what resources are there for them. There's a lot of resources out there. Small businesses, you just have to access it. If you need to make a phone call to the IRS, the information is there. The slides will be on our page. It will be in our weekly newsletter that's going out on Thursday, so that if you need to make a copy of those telephone numbers, you did not do so, you can do so when we send it out, or just go back to our Facebook link and you will see that. I want to say thank you to Dennis and Michelle, who are doing all the work behind the scenes. Thank you to everyone who has joined us. Again, this information is not just for the people who have joined us or who are watching. If you know of a small business owner that you can share this information with, please do so. It's helpful as we get information, as we pass it along. Again, small businesses are very important in all of our communities, and so we need to assist them as much as possible. So again, thank you, Tatiana, and have a great evening, and I look forward to seeing you again.
Thank you so much. Bye-bye, everyone.
Bye-bye.
Bye-bye.